Well, the South African Reserve Bank MPC has raised those interest rates by 50 basis points. Four of the committee members agreed to a 50 basis point hike, while one member had wanted a 25 basis point hike. The rise in food and fuel prices were actually cited as some of the main reasons for the rate hikes. But what will the impact be on businesses, particularly the SME sector? For that, we are joined by Andiswa Bata, the co-head of the SME unit at FNB Commercial. Andiswa, thank you very much for joining us. The interest rate hike could have not come at a more difficult time for businesses who are contending with rising fuel prices and power cuts. And FNB, you believe that small businesses will likely have to absorb costs in the short term. What does that mean for consumers and jobs?
Sure. Thank you very much for having me this evening. So, as you say, whilst we have an appreciation for why the SARB made the rate hike decision that they did today, unfortunately, it does fall on an already strained small business sector in South Africa. For many years now, they have been contending with load shedding and power cuts, more recently the rise in fuel prices. And essentially what today's rates decision means is that the buyers, the consumers of what a typical small business sells, potentially those buyers who are actually borrowers, now have higher debt service costs. So the monthly repayments on somebody's car loan or credit card will probably be higher. And therefore, that means that that person's now going to have less income available to be able to go and spend to support their local small businesses. And unfortunately, given that that is the picture, we can expect that small businesses will unfortunately have to then absorb a lot of the hits that are currently coming their way, which will then just mean that lower profits for them in the interim, because there's an understanding that not all these cost increases can now be passed to an already strained consumer and buyer.
Andiswa, you've spoken about that impact on consumers. Cash flow is such an important part of any business, and these rate hikes will impact on the debt businesses have and, of course, their ability to borrow more money. What does that mean for small businesses?
So it would typically mean an increase in debt servicing costs, whether you are a consumer or a business, irrespective of what kind of loan product you hold. As long as that loan product has a variable interest rate that is pegged to prime, your borrowing costs have increased as of today. Now, what I think is a small silver lining here, so that we don't completely lose hope, is the fact that the good news is that recently, in partnership with the government, there has been the launch of the recent bounce back loan scheme, which is available to businesses at then a more favorable interest rate than potentially those businesses might have been able to pay if they had gone outside of the scheme. So if anything, I do encourage any small businesses out there that do meet the criteria to keep an eye out and look for information on that, such that they can check their eligibility and apply.
Andiswa, the bounce back loan scheme is an important particular factor when it comes to the introduction of some cushion for small businesses, particularly those that have been impacted by COVID-19 lockdowns and the recent floods in KZN. Are you saying that this interest rate hike that has been announced today will not be a factor on this particular scheme? And how has been the uptake, as far as you can see, of small businesses when it comes to taking loans to get back on their feet on this bounce back loan scheme?
So the bounce back loan scheme, the loans themselves are priced at prime plus 3%. So with the increase in the prime lending rate today to 8.25%, that would mean that the interest rate that a business would then be paying is 11.25%. Now that does give some certainty as to what the cost could be. In terms of just some of the information then that is relevant, the loans that are taken out must have a minimum of 10,000 rand, subject to a maximum amount of 10 million. It's businesses that are tax registered with a maximum turnover of 100 million that could apply. And then there are other considerations like creditworthiness and the fact that unlike the previous COVID-19 loan scheme, this one doesn't have as many restrictions in terms of the use of the loan. A business can use it for anything except to repay other debts. Now, to answer your question, how's the take-up been? We've been very privileged to be one of the banks that is participating in the scheme and are very proud that so far we have already started to make payouts under the scheme. It's going really well, and we're currently working on some of our processes in order to make it even easier. So I would encourage any business out there that is looking to get this more information to contact a participating bank and see if they can get the needs that they, the help that they need at this time.
Andiswa Bata is the co-head of the SME unit at FNB Commercial, talking to us there about the impact that the recently announced interest rate hikes will have on the SME sector.